Hello and welcome to the Weekly Outlook at XM.com. This week, flash PMI and inflation data are in focus as recession worries continue to grow in the United States and across Europe. I'm Maria Prashardis, and joining me is lead investment analyst Rafi Boyadjian. So Rafi, let's begin over in the Eurozone. Energy prices are still sky high as the war in Ukraine continues. We'll get flash PMI reports on Thursday. What are we expecting and how might the data impact the euro?
Well, Maria, there is a lot of worries about recession right now because central banks are being forced to tighten monetary policy quite aggressively because inflation is proving to be quite sticky and it's still even rising. We haven't really seen concrete signs of inflation peaking anywhere right now. So the PMIs should tell us how the Eurozone economy is faring, at least how it fared in the early parts of June. So we are expecting a further moderation in the flash readings. Overall, though, the Eurozone economy will probably continue to expand. In fact, the economy has proven a little bit more resilient than anticipated, and that is a good sign. But of course, any surprise weaknesses in the PMIs would likely spark fresh worries about an economic slowdown or a downturn. And this is because the ECB has signaled that they're going to proceed with starting to raise interest rates as of July. They've even said they've strongly signaled they're going to raise rates by 25 basis points, but they're open to raising rates more aggressively from September onwards. And at the moment, inflation is the big priority for the ECB. So should we see a slowdown in growth, that's probably not going to make the ECB go slower. So that will mean that the euro is likely to maintain a downward bias over the summer as these risks hang over the single currency.
Let's move over to the UK now, where it seems as though the economic pain from the energy crisis is even worse. On Tuesday, we'll get the latest consumer price index data. What should we watch out for there, and how might the pound be affected?
So that's right, inflation will be the big data in the UK, but we're also going to have flash PMIs, which will be important too. Now, inflation actually jumped to 9% in May, making it the highest among the major economies. Despite that, the Bank of England is proceeding cautiously with its rate hike, sticking to 25 basis point increments because policymakers are already seeing signs of a slowdown in the UK economy, and therefore that means that demand is also slowing, so they won't have to raise rates too aggressively to dampen demand. But because most of the upside pressure on prices is coming from energy and supply issues, which the Bank of England has no control over, they don't see the need to go more aggressively just yet. But at the same time, the UK economy is so consumer driven, and therefore higher inflation will have quite a strong impact in terms of producing a significant squeeze on consumer spending. So the risk of recession is a lot higher in the UK. So any further deterioration in the flash PMIs for the UK would probably heighten this concern. And as far as the pound is concerned, this is the main risk for the coming week.
We're also going to get inflation numbers in Canada and Japan. How do you think the data are likely to influence policy decisions at the Bank of Canada and the Bank of Japan?
Well, inflation in Canada is approaching 7%, and it could surpass that level in May. From when we get next week's data, the Bank of Canada signaled at its June meeting that it's open to rate hikes bigger than 50 basis points, and this was before the Fed raised its policy rate by 75 basis points. So unless the data is shockingly weak, the BOC will probably follow the Fed at its next meeting, and this could provide the loonie some support in the face of the stronger US dollar. Now for Japan, it's a different story entirely. Core CPI, although it has risen slightly above the Bank of Japan's 2% target, it is expected to hold at 2.1% in May. Governor Kuroda wants to see broad-based price increases, not just in energy the energy prices before even contemplating a shift in policy. And the Bank of Japan just confirmed this at their latest policy decision. So we're not expecting Japan's CPI data to alter anything at the BOJ, which means the yen could plummet to fresh lows against the dollar.
And finally, over in the States, next week will be a quieter one in terms of data releases. So what should traders keep an eye on? And what about the outlook for the dollar?
So it will be somewhat quieter, but we are getting the flash PMIs for the US as well. There has been some early indications that the US economy is slowing, particularly in the housing sector, which we will be getting some data on next week as well. Any unexpected signs of a sharp slowdown in growth from the PMIs would probably spark some panic in the markets, though the dollar would probably benefit from this because of its safe haven status. But investors will also be keeping an eye on what Fed Chair Jerome Powell will be saying when he testifies before lawmakers on Wednesday and Thursday. Powell has been sounding very hawkish lately, so if he doesn't have any soothing words for the markets, we could see the losses on Wall Street deepen even more.
Rafi, thanks so much. And thanks for joining us at XM.com for this Weekly Outlook.